that met me yesterday, they already know me. My name is Pablo Ortiz. I'm originally from Spain, but I had a German education actually. I've lived in 7 countries, and I studied physical mathematics and economics in Germany, but I never was actually working with numbers. Till 7 years ago, I started trading and I started buying EAs actually. And because I was number oriented, I started re-optimizing the whole thing. I never took an EA as it came from factory and just traded it. If you guys don't know what an EA is a robot for MetaTrader. It's a strategy which is completely with defined rules. We'll talk about it today. And there's a lot of EAs here. You see, I'm sorry, again in Spanish. Let me change the language today into English so we do things here properly. And basically, there's hundreds of thousands of EAs in the market. There's a lot of good programmers in Indonesia. There's a lot of good programmers in Russia, Ukraine, Belarus. That's the places where the good robots come from, actually, Malaysia as well. And there's not so many good programmers in Europe, okay? But there is a lot of buyers in Europe of EAs, a lot of buyers. English people buy a lot of robots. Americans are crazy about buying robots. And it's very interesting because MetaTrader started around ending of the 90s. It's actually, if you don't know, guys, it's actually a Russian company, even if it's the Boston Technologies is not located in Russia, obviously, and they have their offices also in Vienna, I think, but it's originally a Russian company. And all these people like Alpari, MT4, they all came from the Russian stock market. The old stock market before the crash 1998, if I don't remember wrongly. So why from Russia? Because there was a very good education in technology and in sciences in the old Soviet Union. I'm not, of course, saying anything about the political system, just about the education. Okay, and basically MetaTrader is not a beautiful environment. Very good chess players, yeah, exactly. But it was the first platform one of the first platforms which had free data, and that's very good actually. And it's also one of the platforms, if not the first one, that allowed to automate the strategies. Okay. So this is really a very big advantage, and they're the number one in this regard. Okay, so what we're doing with these webinars is popularizing a bit, trying to make the transition from manual trading to automated trading. My purpose with these webinars is that you understand how a manual strategy is traded and how can we improve it in order for it to become a very good robot. Okay. That's a bit the idea behind these lectures. I call it the Trading Lab. It's part of our paid education. Advertising will be at the end, okay, only. But it's actually the level 3 of our paid education, which we deliver in 5 languages, and one of them is English, okay? And, well, today we're going to speak about basically a range system. Many people don't understand the main characteristics in trading. They have very confusing ideas that trading is actually 3 ways of trading and then big families of trading. And these 3 ways of trading, or I call it market characteristics, are the following. I'm going to write here on the board. My handwriting is not nice. Okay, so success rates of robots, I can show you in my fixed book later if we have a few minutes over. Boyke, you can write me anytime. There's my email, and Olga or somebody else will answer, and maybe it takes a few days, but I answer the emails. Okay, so we have range, we have trending or trends, okay, ranges and trends, and we have breakouts, and that's it. That's the basics. And this is traded basically. Range, we need to define 2 price levels. And the price will move up and down, and up and down, and up and down. But question, if the price goes from here to here, do we have a range? No, we are not confirmed. Do we have now a range? Probably not. Do we have a range now? Probably yes, when it returns. So we need always a confirmation. We need to know that for it to be a range, we need at least in general, also in training, we'll see that now, at least 2 and 2. And when we say 2 and 2, we means that it really reverses here. Okay, so that's how you would operate a range. I put it wrong because red is actually selling. We would sell here, okay, and we would buy here below. Why? Because we expect it to return to the range. And there is one way of trading ranges, which is mean regression. Mean regression means that you go back to the mean. And the mean, I painted it here with a moving average. And you expect when you buy here to go to the mean. You are not expecting to go to the other part of the range. That's not the right way of trading ranges. So mean regression, we could say, is a style of trading ranges. And what is most important, which people don't understand, because you always hear the bullshit, and I'm going to call it what it is. It's bull. The trend is my friend. It's complete bullshit. And I will explain why it's bullshit. Because it only happens 20% of the times. We had in 2012 absolutely no trending in the euro dollar. Absolutely. We have now some trending in the euro dollar, but if you were trading trends on 2012, you were earning no money. So what you have to do is to trade all three things together, because you will have ranges, 20% of the time you will have trends, and 10% of the time only the ranges will break. Okay, they will break in some direction, boom, and that's a breakout. And a breakout is the beginning of a trend. Okay, and there are subfamilies to this. Okay, what is my friend? The range. But it's very difficult to trade. Why is it, my friend, the range? Because it's 70% of the time. But my true friend is all three together, plus another friend which I have, which is called the scalp. And these two, this one and this one, I'm going to explain next week. I'm going to give you two systems to trade them. So I will give you the whole view with 4 different families with exact rules as I'm giving you. So you have an idea how you can trade all 4 things. The problem is when you specialize, you over-specialize in trending, you over-specialize in breakout, you over-specialize in scalping. That's a wrong approach to trading. And that's what many trading schools teach you, and that's wrong. Because you never have the right conditions for everything. You need to at least know one system of each. Okay? That's I know that many books say something else, but that's my experience, and that's my method. Okay? I hope it helps you. Because there is a lot of fixed ideas about trading, a lot of I call it myths. I gave a lecture last year, very popular lecture. It was the demystifying trading. Okay, and one of the myths is the trend is your friend. Okay, I will write a book, that's for sure. Okay, so now we understood we have these 4 characteristics of the market, and a false breakout system is basically a range system. Because we are trading the breakout, but falsely. What we are doing is many breakouts seem to break the range, okay? Like we would have here a range, okay, which is confirmed. And suddenly the price goes here, and we think, aha, it's breaking. Normally, if it's breaking, what would you do up here, guys? If you were attending what I was saying, what would you do here? Would you buy or sell if you are expecting a breakout? You buy here because you expect the price breaks and never returns. Well, in the false breakout, you do the opposite. You sell because you say, okay, that's a false. The market tried. Why did it try? Why do you think it would try to go there? Because there's a lot of people having their stop losses here. A lot of people who are trading the range are putting the stop loss here, right? So the market maker is very happy to eat the small fishes here. Yes, very good, Sandy. Most breakouts are first false breakouts. That's why this trading system will work. Not always, but I'm happy with 60% of the time. It's not because of selling pressure, Forex Go. It's because there is the stop levels. You need to understand that there's different types of trading, and the market makers make the game. They see you. You are basically in a pool, and you guys and me also. We are the little fishes, and they see everything about us. They see the volume, they see your stop losses, they see everything. But that's a theme for another lecture. Okay, so now that you understood, we are here in a range. First of all, we will define the range with a new rule, which is very interesting. But I need to give again the basics, because how many people were not yesterday here? Please write wasn't here or no in the chat. A lot of people, 2 people, the rest was here. Okay, I need to go quickly over again over the 6 parts, 6 legs of a trading system. I will do it very quickly. The video is up already in FX Street. You can watch it again, but very, very quickly. Another thing, what is a trading system and what is not a trading system? You need to differentiate very clearly between a trading system and a strategy. And a strategy may have some rules which are not univocal. What does it mean, univocal? Univocal means only one sense. If I take the word father, it's not univocal because it has 2 senses. There's the father who has a kid, and there's the father which is a priest, who is a priest, right? So it's not a univocal sense. So when we're talking about trading system, the rules are univocal. They only have one way to be understood. There is no absolute interpretation. So if you are not getting univocal rules like I'm giving you, either they're cheating on you or it's not a trading system. But they cannot call it a system if it's not univocal. Second thing, it must be exactly replicable. If I give you the rules, Sandy, Forex Gal, Boyke, Paul, Jacob, Russell, and all the other guys, they're doing the same, at the exact same tick, at the exact same candle. And they're entering the trade exactly the same way by the millisecond, okay? And they're exiting the trade exactly the same way. If it's not exactly replicable, it's not a trading system, okay? Third thing, it's closed. The definitions are closed. There is no room for interpretation in trading systems. Hence, I can automate it. Okay, so next time I call it the smoke speakers detector. You know, if you find somebody explaining your trading system, if it's not univocal, if it's not exactly replicable, if it's not a closed definition, if they say, yeah, buy when it's trending up, and they don't give you a definition what it's trending up, it's not a closed definition, it's not univocal, and it's not replicable. Because what is for me an uptrend is not for you an uptrend. So that's the first thing when we are talking here about trading systems. Another thing, which I explain very quickly now, is that a trading system should have at least 3 legs out of 6. You couldn't have a table with 2 legs. You could, but not in planet Earth. Okay, so it has to have entry rules, exit rules, filters, at least 3 of them. The entry rules are always composed of 2 parts. It's like a shotgun. You cannot have it loaded. First, you need to load the gun, then you shoot. Okay, so the same with entry rules. I need a trigger and a setup, or a heart, or the core, or whatever you call it, and then something that confirms this rule. And this confirmation is always with the logic of AND. That means condition number 1 plus condition number 2. It's never or. This trigger, it's always an AND condition. Okay, it's conditional. Both things must be in place. I know the template will arrive because we will put another template, Russell, today. We waited for today because I'm sure many guys will want the template today. So Olga will send the templates today evening, okay? Some people just wrote, we need the data, guys. We need your Skype, what I wrote in the end. So if you didn't fill all the data, you'll get the template, don't worry. Okay, so it's very important that you understand that's very important for an entry rule. If we don't have both things, we don't have an entry rule, we have a problem, basically. Okay, a classical example of this I gave you yesterday would be just 2 moving averages, right? And you need to understand that when you change the parameters of the entry rule, what happens is that you have a lot of more trades. If I put here, for example, moving average of 2, the crossings of the blue and the red moving average give me 1, 2, 3, 4, 5, 6, and 7 signals. While if I put it very long, for example, like this, well, it's the same. Let me put it another way, like for example, 90. I have only 1, 2, 3, and 4 signals. I had 7, now I have 4. So every moving in the entry signals will filter out trades, but that's not a filter. And that's very important that you distinguish it. Many people have a confusion on that. Okay, next thing, the exit rules. The minimum requirement for a trading system in our method, for it to be a trading system and that you can put the label of system on it, it must have a stop loss. There's many people trading without stop losses, and it's not systematic trading, period. Okay, so you have 2 types of stop losses. You have dynamic or fixed stop losses. Fixed is exactly by points, and dynamics are made by a formula, or by the lowest. You can, for example, put like the lowest low. For example, you're going here up, and you say, okay, the last 2 lows. Okay, you're here. And you say, put me the stop loss 5 pips below the last, is the minimum of the last 2 lows, which would be this one. You would add here 5 pips. Okay, here's your stop loss, for example, and then you go 1 more minimum up, and then it's here 5 pips below this one, and like this. That's also a dynamic stop loss, but it's not a trailing stop. Okay. Sorry, that would be a trading stop. I confused you. What I mean by dynamic stop loss is that the definition varies every time by a formula. Okay? I don't know if I confused you there, but it's just once the stop loss. Okay. Another way to exit a trade is by the reverse signal. Let's say you entered the trade because it gave you a sell signal, like here. Gives you a sell signal. No, because now the moving average, I put it wrong because we like to put the cold colors. That's our way to do things. The cold colors are now it's better. Okay, so this is a longer moving average. This is a shorter moving average because of the colors. Okay, it's colder. So here we have a sell signal, and here we have a buy signal. The latest to exit the trade is here. Okay, which would be a good trade, this one, but normally 2 moving averages don't give very good trading systems. Okay, so a reverse signal. The levels of an oscillator would be also a way to exit a trade, like here on our RSI. Here I have oversold. Here I have overbought, right? So if I had a signal here, when I get here or here, it would be a way to go out because it's already the other contrary level of the oscillator. An oscillator is something that is comes from the price, and it's not the price, of course, it's a formula on the price and moves between 2 levels. In this case, RSI moves between 0 and 100. Okay, that's an oscillator. Okay, and price levels exit at this level, or a timer after so and so many minutes exit. Very good. On top, we have the filters. The filters is something additional, and it should help us with the ratio. It should help us with the edge. If we had an edge of whatever, of 10% on our trading system, this I will explain in the future. I hope in June we will continue to give webinars here. Then your edge should be bettered. That's why we use filters, but you must be very careful to not overfilter. If you overfilter, we have a problem that you over-optimize. You make a curve fitting, and the trading system will not work in the future. Okay. Position management. Position management, you need to distinguish between positions and trades. A trade is one entrance. Every single entrance is a trade. But let's say you bought, you were wrong, you buy again in a lower level. These 2 trades will make a position. People confuse the terms. Position is one thing, trade is another thing. You can have positions which are made out of sell and buy trades, but they belong to the same strategy. That's the point. Okay. So Generally, you can handle a position in three ways. You can re-entry, you can enter a trade again in a lower or higher level, you can close partially the trade you are in, just with earnings or with losses, to accept a bit of the losses, not all of them, before the stop loss, or you can use a trailing stop. A trailing stop is moving the stop loss once you are in the trade. Okay, so if you re-enter in the opposite direction, we call this hedging. Fifth leg is money management. It answers the questions: how much do I need to buy? How much do I need to sell? Specifically regarding timing. And many people have a confusion on that. The timing is the most important part of the money management. There is many ways to approach it. I mentioned yesterday about market regime, meaning which conditions are good for your system. I can show it very, very quickly how it would be on market regime. You would, for example, go for the daily candles and you would say, okay, what is the conditions now on the euro dollar? For example, now we have a very, very market regime. We would take just basically two indicators, and which is the ATR, the daily ATR. Now on average, in the last 14 days, the euro dollar is moving 111 pips, which is not little. And when it started to go up, it was moving 178 pips in the last 14 days. So it was more volatile. Now it went a bit down, but it's not very, it's quite still high volatility compared to, for example, July, where the volatility, the average per day was 43 pips. You see that, right? So we are now in medium volatility, we could call it, and we could consider it would be good for breakout. Okay, that's market regime. And ADX, we will see it today, it's about trending. The blue line will tell you if there is a trend, and when the blue line goes down, it's less trending. It's more stagnating. That's market regime. That's one way to consider money management. To say, well, for breakout, I need more volatility. So when it's below a certain level, I will just put less volume. And when it's more, I will put more volume. It's just one hint. I don't want to go very deeply into this, but so you get new ideas about money management, because usually you hear only just a fixed percentage or whatever, or just compose capital and all this stuff. But there's many more ways to deal with the money management, which are probably more intelligent than the usual ways of dealing with money management. And the last thing, it's a leg which I added because it's part of money management, which I call risk management. And it has to do with how much can you risk in your account. We have 5 safety nets on that in our trading method. And the maximal drawdown can never be more than 23% of the initial balance. The maximal losing streak, that's the consecutive losses in a row that you have, cannot be more than 15% of your initial capital. And the maximal you can risk per position is 2%, but you should risk actually on average only 1%. This I will explain in other lectures. I actually explained it last time I was in London. I probably will not come in June to London. I'm going to Germany most probably. So I cannot divide myself more. I cannot clone myself more than I already do. Okay, so now we have the 6 legs, and now we're going to go into the thing. You know, we're going to go in today's trading system. Okay, we're going to trade it. You can watch the video tomorrow. It's going to be up, I'm sure. Just don't worry. You don't need to take notes. We're going to trade it on the cable again. This time on M15 charts. It doesn't work so well on M5, but you could consider M5. Okay, but you shouldn't trade it more than M15. Okay, so what we do basically is we need to confirm that we have a range. How we do that? We basically wait for the ADX, which is a trending indicator. You have it here. We'll take the standard, the 14 period. I don't know what's happening with internet. A lot of noises. And ADX 14 periods. Okay. And what we do, we check that it goes below a level of 29. You see here the red line. It's at 29 level. And once it starts to go below, for example here, first candle, we start counting candles. It goes up 6 candles, so 6 times 15 minutes, 1.5 hours. It goes up, it's not a signal. It goes again below. Here we go. First candle. And we start counting at least 10 candles, 12 candles. Here it happens. We have a confirmation from alerts. No, I'm not having alerts here. Thanks, Sandy. Or Mike. Sandy or Mike, or both. Okay, so we have here 12 candles. It's confirmed. We just now confirmed that we have a range. Okay, we could wait a bit more candles. For example, in this case, 20 candles. Okay, and what we do here is we put, it's not properly done in this case, because we would put above the maximum here, we would put a sell level, and here we would put a buy level. It's not properly, I didn't do it fully properly in this one. Okay, after the 12 candles, and this is the middle of the channel. So what we do is once the first order hits, we can sell the other one. That's very, very important. We're waiting for the false breakout, which happened here. Okay, I thought it happened later, but it happened here, but still a good signal. I will tell you now where the stop loss goes. And it takes a lot of hours in this case. It takes 45 candles. It goes to the target. It's a winning trade. Okay, this is, it's because I did a mistake. It should be on M15. Sorry, that's why I didn't. I told you you could trade it on M5. This was from, I just gave this webinar in Spanish yesterday. So, okay, it's a mistake. Okay, so let's start again. Here we go. We start here to count. Okay, we wait the 10, 12 candles, and now it's correct. You see, now we put it, and there is another parameter in the system which is very important, which is the number of pips we will be from the candle, from the maximal candle and the lower candle. I would say minimum 3 pips, maximum 12 pips. You shouldn't wait the false breakout too high from this maximum, and you shouldn't wait it too close to it. Okay, so in this case we're waiting here sell, we're waiting here buy. Okay, and what happens here should be on M15 candle. Sorry for that, guys. Here we have the false breakout. You see it? It hits here, and very quickly in 2 candles we get 20 pips earnings, and that's it. Where does the stop loss go? The stop loss goes, and this you should, if you automate it, you should optimize it. The stop loss goes more or less 0.8 times the width of the channel. Okay, so if the channel is, in this case, for example, we wait the 10 candles here. Here it starts, but here it's again 29, so it doesn't count. Here it starts again on this candle. You see it on this one. We count 10 or 12, whatever for this case. And here's the channel. Here's the minimum. Here's the maximum. And the width of the channel, we need to be careful if we measure it on the maximum to minimum, or we measure it, I mean, especially for if you robotize it, you need to define the width. Either it's this one, 25 pips, or it's plus the pips you added. It's very important, the formula, when you robotize it. Okay. In this case, we take the original channel width, which is 25 pips. So more or less with a stop loss of 25 or a bit less, you would be okay. So in this case, I'm gonna steal the stop loss from here. And more or less the stop loss would be, because you cannot trade without stop losses. Yeah, we said it, right? So it's 25, excuse me. Here's the entrance. So 25 would be almost like a bit lower, something like this. Okay, so this would be the stop loss for it. And because you're earning more than, you have a ratio of 1 to 2 in the system, but it's gonna make more than 70% of the trades right. So you shouldn't be concerned, because the majority of the first breakouts are false. Okay, this was a false breakout, and I have other examples. So it's a very simple system. We just use the beauty of the ADX, that it goes below a certain value. And why is it a good system? Because it combines, it's perfectly to combine with the system yesterday, because yesterday we did a breakout system, and the ideal match, it's breakout with ranges, because they trade the opposite. You should always trade 2 systems together. This This is a very good match. These two together, they combine very well. You can understand that if I'm trading ranges, I'm basically buying here and I'm selling here. And on the breakout system, on the range system, that's the range system, which is in this case the false breakout system. It's a subfamily of the range systems. And on the breakout, I'm buying here out of the channel and I'm selling here. So when one is not working well, the other one is making a winning trade, if you get my idea. So these two systems combine very well. Okay, so now questions, because that's the basic manual strategy. And now I'm going to make, like yesterday, the improvement. Which of the three? I don't understand, Boyki. No. It's three different robots. It's two different robots. Yesterday was one system, was one robot, okay? And today's another robot. Let's not mix them up. They have different parameters. You put them together in the market, but that's it. Then you put them in different windows. How does it work? Basically, you MetaTrader, you open a window here. Let's say, for example, one robot. Just very quickly. That's very basic. I think most people know this, but you would take robot number one, for example, the breakout. This was the breakout yesterday, and you would trade it on the euro-dollar 1 hour candle. Sorry, I put it wrong. This would be here on the 1 hour candle, and the other robot, you would open another chart, M15, and you would trade here the false breakout system, okay? And you put the other robot here, okay? And they trade separately, but on the same account, okay? You have the robot here on the 1 hour chart, breakout system yesterday, today, false breakout range system, actually, and you trade it on the other chart, okay? That's just one example, okay? Okay, so, but now we're checking the manual rules. Is that clear, guys? You can also try to make the stop loss, put it closer. You can try as low as 0.5 of the channel. I'm gonna change the slide here, okay? But don't go lower, because the false breakouts may come with force, with impulse, and the spike may take you out of the trade. Okay, so I wouldn't recommend it to put it close, but this is up to you. You need to play with this. Okay, what's very important is once the trade is entered, like here the sell, you need to cancel out this buy order. Okay, this buy order should be completely taken out because the sell hit first. And another important thing, don't trade it close to the news ever, because on the news you may have wrong signals. You know, a lot of spikes, and it's not the way to trade it. Okay, so if the rules are clear, are the rules clear? I'm going to go now to the improvements of the system. Are the rules clear for everybody? Yes or no? Only one person answered. At least 5 people, 10 people could say yes, no. Okay, Russell. Who else? Is it clear or not? I can explain it again, no problem. Okay, so we are small minority of people who understood it. Yeah, I want to show you here another entry which I prepared, which was from the day before. As you can see again here, ADX goes below 29. It's good to explain it again. I take the ruler, 10, 12 candles, 9, 10, 11, 12 candles. 12 candles is 3 hours actually. The only problem of the system is you're gonna, wake up, exactly. Very good, Boyki. A bit of participation here. The only problem is you will trade a lot in the night. This is not a problem if you're living in the States or you're living in Asia. But if you're living in Europe, it's a bit of a problem if you need to work this next day. That's why you should do robotic trading. Okay, but this will come later. Okay, so basically we start here. We count the 12 candles. We put the buy and the sell. It enters here, but by very, very little, and it takes a lot of time to go out. But what is very interesting here is that the original channel is only 12 pips, 14 pips barely 13 pips. And this will be the first improvement. It doesn't make sense to enter a channel when the width is very little. Why only 12 candles? Because otherwise we don't trade. It's because of optimization, Linda. What we basically do, we do the system, we robotize it, we trade the parameters. Let's say, for example, Linda, you would be waiting here 35 candles, which is a lot. 35 candles divided by 4, because it's M15 chart, right? Would be 36 divided by 4, 9 hours. You won't be waiting 9 hours to check when to put the limit orders. You would get a lot of, the channel would be moved already. Okay. Why you need a false breakout system? You don't need, I'm giving you options, Boyki. Yesterday, if you like the systems yesterday more, then trade the system from yesterday, the breakout. I never trade a system alone. I just explained you. It's suicidal. I trade at least 4 systems together. And I explained you the reason today. Just need to watch the video again from the beginning. I never trade only trends. I never trade only scalping. I never trade only breakout. It's not correct. Okay, because the market will not be in my favor every time. The system will not work forever. Okay, so to finish the answer to Linda, you shouldn't wait too many candles. Okay, 10, 12 is a good measure. Okay, so here it enters, but it's here, the internet is okay. Yes? Sound is back. Yes? Okay, something with the sound. Okay, I repeat that again. You need to filter. You need to filter out when the channel is too narrow. That means when the original channel from maximum to minimum of these 10, 12 candles is less than 12 pips, forget about it. Don't enter the trade. Another thing you need to filter out. And this is very, very important in our trading method, in the methodology. When you're trading breakouts, because this is kind of a breakout system, but the opposite, it's a range system. Okay, it's a range system. But in breakouts, the main part, the main leg that you need to have attention on, and we saw it yesterday, is the filter. When you're trading a breakout, you need to check out, how do I filter the false breakouts? When you're trading a trend, we'll see it next week. The important part is not the entry. People are working on the entry. You're always late in a trend. You never catch a trend at the beginning, because otherwise you wouldn't know it's a trend. You need to confirm it. So in trends, the important part is the exit. And we'll see it also next week. When you scalp, you don't care where you exit. You care where you enter the trade. But more about it next week. Okay, so basically now the important part, how I improve a false breakout system or a breakout system, is by the filters. Filter number 1, if the channel is too narrow, forget about it. Filter number 2, if you're trading the wrong hours, don't enter. You need to check which hours suit you, which hours don't suit the trading system. And the last one, which is a bit more complicated, is volatility. Filter of volatility. So basically what you do here is, I took it away, you put an ATR, which is a measurement of volatility. We saw it yesterday. And I would filter out those moments where the volatility is too narrow. You see it here. This is a very narrow channel, but I also see it here because on average, it only moves 6 pips every 15 minutes. That's nothing. It's sleeping, but it's sleeping too much. Whilst the other channel that we had here, you remember, this one here, I took the blue thing out. Let me put it again so we see the channel properly. Okay, you remember this channel here. Just need to go to the ATX, and I could even paint it here in whatever, but you see it. You see my mouse. Here's the channel, right? Okay, it's okay. The volatility is 11 pips. So I would recommend you to filter out low volatility with an ATR, to not trade those moments where it's simply sleeping too much, like here. You see this range here? Okay, and well, it starts out well, but then later it sleeps. Okay, so this would be the 3 filters that would really improve your trading system quite a lot. Okay, so you should take care of them. So questions. We have 2 more minutes. Questions. I understand that some people like the other system more. It's not about like and dislike. It's about just having an overview of different ways of trading. And I recommend you to trade all kinds of different things. Don't over specialize in one way of trading. That's the ideal. If you use both systems together, I can go extra 5 minutes. No, because there is other lectures, Boyki. You know, this depends on Adinda, not on me, you know. I usually need to finish sharp in time. Okay. No one after me? Okay, that's great. Well, I have a very long course tomorrow in Madrid with Admiral Markets. It's going to be 12 hours tomorrow because we give free lectures. The guys who were in London with me, they know that I normally extend myself over 10 hours per day for free, 2 days in a row, and I hope to come to London soon. Who is from London? You never answered this question, or from UK? Who come over to UK? Okay, so first the questions, guys. First the questions. You're from London, Russell. That's great. Okay, if you want the template, again, as we did yesterday, please, but you need to write us the data. You need to write us name, last name, country of residence, your Skype. There's no way we can contact you without Skype. Your cell phone, if you don't mind. And how many years in trading? It takes you 1 minute. And you write here, and Olga will very kindly send you both templates. Okay, so you did that, great. So if you want the template of today, just short note, I want the template of today as well, that's it. Today's template is easier because you can do it yourself. It's not very difficult to take an ADX. But anyway, you'll have these price levels, so you remember exactly the entrance and the exits, okay? We did it in Chamber of Commerce last time, Paul, but I don't know. My English course in Madrid, we will do webinars. Maybe we just do the paid course in Madrid without the London event, and we come to London in September because I'm negotiating now with a broker, but today they told me they want me first in Germany. They want to do 3 cities in Germany, so I'm just, you know, I go with the wind, Paul. I know you know us for a while. Just follow the free education. We have a lot of free education now in English. We start in May. In June, probably we will continue more with automated trading, purely automated trading and performance of EAs. There is a lot of performance in my FX book. Let me show you. I don't know if you know this page. I showed performance yesterday. If you watch the video of the lecture yesterday, you will see more. Can you post in chat link the performance? This is, for example, a performance of a student. Okay, it's private because we don't share privately. It's a real account. He took it out because he withdrew. Okay, it's a real account in Swiss Quote. Actually, it's a Swiss broker, and he did this performance with a lot of robots. I'm going to show you now in 9 months. That's a student. Okay, that's a tutorial. We sign a non-disclosure agreement. Okay, I'll show you a very long-term account, and what is most important is the risk. He was risking only he sent money and withdrew 1,000, and that means that €6 it's a risk level of 0.6 per trade, 0.6% per trade, and that's trading with a lot of robots. Actually, every magic number is a different setting on different systems. You know, it's a portfolio, you see, and we trade a lot of pairs with a lot of systems together. Okay, we never trade just one pair or one system. My method, I teach them to, of course they fail. Of course they fail. Boyki. Of course many robots fail. That's why they get stopped. But we give you everything in the method. We give you the routines to stop robots. We give you the optimization routines. It's 5 days, 12 hours a day, the paid education. I would recommend you first do all the free education. Once you understand the basics, then you can come to our paid education. Many robots were stopped. I could check here, and when he stopped them, you know, for some of this one was losing, he stopped it. It's failing. Of course, it's failing, but in the overall, it's earning. Okay, even the manual strategies fail, Boyki. There is nothing forever. Only marriage is forever, they say, right? Okay, so at least when you are there, they tell you that should be forever, you know. So it's the only thing. Okay, there's nothing forever in trading. Okay, I would say very good robot will last 3-4 years, not more. Yeah, Sandy, it's a very good question, Mike. You filter out by performance. We give you routines. It's called equity control. You check the equity of the robot, and if it's not following the historicals of the robot, you really need to stop it. Okay, let me see if I have here something. 1 second. If I have here something from yesterday, but here, for example, you had a maximal drawdown of 10% here. When you pass some statistics, you need to stop the robots even earlier. If the performance is not as the back test, you need to stop them. So we give you everything. We tell you where to find the robots. We tell you which builders we recommend. You can also build robots automatically. We tell you where to find cheap coders in Ukraine, in Russia, how to find them. We help you with everything. You don't need to program, okay? Why are robots better than manual? Well, why are chess robots better than chess players, Boyki? Why do you think? It's not a simple question. It's not a simple answer. It depends on the average. I'll give you the answer. There is a year, I don't remember, I'm not a chess player, but it doesn't depend on the weather, no. Funny. It depends on the average. The average trader, there is a study, you can check in CTFC, there is a study on CTAs. CTAs are basically the money managers in the States, and algo traders will outperform manual traders by 10%. That means that basically 50% of the professionals, I don't have the stats here, but they are official, 50% of the professional traders will lose money, okay, of the CTAs, and only 40% of the algo traders will lose money. So robots are slightly better on the average. Of course, there is incredible robots and there is incredible manual traders, okay? But basically, algo trading helps you a lot with the psychology. It's another way to trade. I showed you this trading system. You can answer it yourself. Do you want to stay at, I don't know, what was it? So it's 10 candles here. It started at 11:20, okay, 10:20 London time, and you're up till 12 candles, okay, here. You're watching the charts until 1:30 in the morning. Do you want to do that every day? You know? It's obvious, Boyki. You want the robot to do this. This strategy can be easily automated. Okay, so it's all about method. I answered yesterday. I mean, robots will outperform manual trading if you know how to work with them. If you buy a robot and put it on the market, you will lose money. Just slower than manual trading, but you will lose money equally. You know, you need a full method. You need to educate yourself. I don't care if it's with us or with whomever, but robot trading needs a lot of education. As any trading, if you thought you could go on trading just with a 4-hour lesson, that's a blatant lie. I mean, you really need to get educated no matter what you do. This is a profession. I don't know if you read Malcolm Gladwell Outliers. It's an excellent book. He talks about, I don't know, a lot of people, Steve Jobs and all these outliers, these excellent people, Michael Jordan and everything. First rule, 10,000 hours. You need to fly 10,000 hours to become a professional, a master, no matter what you do. If you haven't been, I have been at least 30,000 hours in training already. There were days I was training 14 hours, automating robots, manual trading, everything. If you compound these hours, that's the only way to become an excellent trader. And the rest is a lie. At least 3,000 hours to understand. I'm sorry if I gave you bad news, but it's Malcolm Gladwell. Buy the book, Outliers. First thing, 10,000 hours to become a master. There's other things you need as well. Okay? It's a very good book. He used to write for, I don't know, for Washington Journal or whatever. It's a great journalist. Okay. Chess has limitations of moves while trading has too many variables. It's true. Besides Vista, trading is based on emotions. So mathematical approaches to trading are good, but they have also limitations. I'm going to write it here, the book. It's Malcolm Gladwell. The book is Outliers. It's really an excellent read. Okay. So that's the first thing. You need to have the right mentality. The right mentality means working 10,000 hours. No, it's more than 2 years, say Mike. It's much more than 2 years. If you do 2 hours and 42 minutes per day, it's going to be around 5-6 years. If you go full time, it's another story. Okay. So 10,000 hours is a long road. I would say our education will take out the first 2 years out of the equation. But the other 3 years, you become a trader after the year number 5. I will give a lecture on that. I call it the trader's pyramid. I will give a lecture on that, hopefully in June, and explain you my view on trading. And the problem is that many people enter the pyramid in the wrong way. They start with technical analysis and other things. They never do statistical analysis, and that's a big handicap. Okay, guys, so I think I extended myself back to the trading system. Do you have some questions? Of course I use robots. I only use robots. Okay, some other questions? Statistical analysis. Statistical analysis. I dream them. Yeah, I dream sometimes with optimization, Boyki. I'm serious. Sometimes I go to bed at 3 in the morning. Okay, I will put the slide again. Okay, statistical analysis. Who was it? Bista, where are you from, Bista? 1 minute of statistical analysis. Okay. Nepal. Okay, I've been in your country. Beautiful. Kathmandu. Beautiful. Okay. How is it going with the earthquake? Of course it works. I couldn't be lecturing and it doesn't work. Okay. But it's bad with the earthquake. I can imagine. Okay, guys, statistical analysis basically means you have to have at least a very, very long period. We do very, very long back tests. If you watch here, it's going to be 10. It has been 10 years of back test. Many people back test only 1 year. That's the first problem. Why 10 years? Because I have 128,000 candles. I'm making a survey on 128,000 candles, and I'm asking them, do I make money with you or not? If you make a survey around the corner to your 2 neighbors and you interview 20 candles, of course you are always profitable. But if you interview 128,000 candles, out of which 741 times you are entering a trade, you have a very robust statistical analysis. Later on, we have our own software, which we explain also in the education, and we need a minimal amount of trades. This was the system of yesterday, okay, which is robotized. If you want, just go back to the video, guys. It's in FX Street. And what happened is that we have at least 6 trades per month. It's in red. It means it's not very good, but it's better than 3 trades. The minimum what we need is 7 years of backtest and 3 trades per month. If we don't have that, we don't have any warranty that the future will be similar to the past. Okay, so keep on that. It's not the same a trading system that trades 7 times per month than a trading system that trades 30 times per month, because I will have more warranty that the future will be similar. There is other things we do. We don't optimize till the last minute. We leave the last month out of the last year, and we check if it also made money in the end. So all of this is statistical analysis. I'm not a good salesman, man, Boyki. I'm a trader. Where are you from, Boyki? Yes, the contact info. Okay. Yeah. Okay. So let's finish. I know you're joking. Where are you from, Boyki? I'm gonna write the email here. Our website in English is crap. We didn't finish it. It's all about expertadvisors.com. Which part of Africa? Okay. I'm gonna be back next week. It would be on the Adina wrote it here on the 11th of May. We talked bits and bits. I want to make it systematically about statistical analysis, and I'm going to explain you about the traders pyramid. Let's organize some things in June. Okay. No. I did another master in Miami. What I did, you can check my LinkedIn if you want. I did physics career. Master's was in international relationships. Nothing to do in Miami. Okay. It's better Germany for mathematics than the States. Sorry for that, guys. Much better Germany. Okay. Yeah, thanks. Yes. Miami, about, I don't know, Vista, which university? Miami, Florida, yeah. I was in Miami, Florida. University of Miami. Coral Gables. Okay, you can add me in LinkedIn if you want, but don't send me questions. Don't send me questions. Can put it here. Thanks. Okay. The hurricanes, exactly. Yeah. Okay, guys. So I think that's it for today. If you want the template, you get it for free, but please put all the data there. And we meet next week. We have 2 systems still. We have the trend system and we have the scalping system. I think with these 4 systems, it's a pedagogical purpose. You will have an overview of different approaches to trading with exact rules, not with smoke rules, with very precise trading rules, and just try them. Try them on demo, okay? Don't go for live immediately. Just take it easy, okay? And once you have them in demo, you understood them, then you can go live, okay? Okay, that's it for today. We're gonna cut down now the lecture. We meet next week. Thanks, Paul. And I'll keep you posted if I come to London, okay? I may come just for business, but not for lecturing. And we probably will organize something in English in our training room for the summertime, and I'll keep you posted about it. Okay, so thanks to all of you, and we will be here on the 11th of May, I think, with the scalping system. Okay, so see you soon. Bye-bye.